Fall is just around the corner. Could it bring a market fall with it? A closer look at the potential of a September slump in today's fastest 4 minutes in finance. Hello again, I'm Scott Inman. Well, the market keeps going up and up, but we certainly know it can't go up forever. Could it be tripped up simply because we're turning the page on the calendar? The stock market, as measured by the S&P 500, just finished August up 2.9%. Now that makes an impressive 7th straight month with gains, and that is rare territory. Take a look at this list of the longest monthly win streaks since 1950. The record is 11 straight months of gains. It's happened only twice. The 7-month streak we are currently on ties for 10th on the all-time list. Could we challenge the record? Well, if we do, we are going to have to get past what is historically the worst month of the year for stocks. That's right, September is not very kind to the markets. Take a look at this chart from LPL Research. The 9th month of the year has been negative on average since 1950, over the past 20 years, over the past 10 years, and even in post-election years since 1950. It's the only month that is negative by all 4 measurements. September was not great last year either. When you think about bad market news in 2020, you certainly go to March, when the government imposed economic shutdowns, drove the S&P down about 30%. But after the summer rally was over, we actually saw nearly a 10% correction in the middle of September. Now, just because it's happened before doesn't mean it will happen again, but we are certainly overdue for a pullback. The S&P 500 hasn't had as much as a 5% correction since last October, and with stocks up more than 100% since March of 2020, it stands to reason that we should be prepared for what we would call seasonal weakness. However, if that happens, it should not be viewed as trouble. We believe the economic data is still strong, and stocks have the potential to be higher by the end of the year than they are right now. Any September weakness should be viewed as an opportunity to add to equity holdings. Now let's end this on some good news. Back to that 7-month win streak we are on. Take a look at what historically happens next. The S&P 500 has been higher 6 months later 13 out of 14 times, with an impressive average return of 7.8%. And if you even go out 12 months later, it's been positive in 11 out of 14 instances, and the average return is a whopping 9.5%. Bottom line here is we should be prepared for the possibility of a trip as bumpy as a hayride over Arkansas farmland. But don't let it scare you into falling off the wagon. Even though leaves will be changing before too long, we don't expect the market to change its colors soon. Thanks for watching.